All right, hey everyone, welcome to tonight's webinar. Really glad you're all here. So a bit about me before we dive in. My name is Chris Sheen. I'm the Education Manager here at the Learning team. But before this role, I spent years actually doing this work out there in the industry. I worked as a buyer's agent. I currently co-own a buyer's agency, which is still operating today. And I'm also actively working as a selling agent. Just as an agent on the ground, writing contracts, negotiating deals, the day-to-day sort of stuff. Okay, so today we're going to explore anti-money laundering and what that means for you as a real estate agent. So we're talking about AML/CTF, which is anti-money laundering and counter-terrorism financing legislation, and how it's about to change real estate in Australia in a very significant way. Let's have a chat about it. So what is AML/CTF and why is real estate suddenly in the picture? So the legislation, the Anti-Money Laundering and Counter-Terrorism Financial Act, so that's the name just for tonight, and going forward it's AML is what we'll refer to that as, but that's the full legislation. It's a bit of a mouthful. So AML has existed in Australia for nearly 2 decades. But up until now, it's mainly applied to banks, financial institutions, and payment providers. Real estate agents have been largely outside of the regulatory framework. And here's the uncomfortable truth about why that matters. Property has long been identified by law enforcement and international bodies as one of the primary ways that organised criminals launder money in Australia. Large sums of dirty money get moved through property transactions because historically, no one in the transaction chain, not the agent, not the conveyancer, not the lawyer, was legally required to ask where the money came from. And that's about to change. So the reform is called Tranche 2. A whole new category of business and professions are being brought under the AML/CTF regime for the first time, and real estate is right at the center of it. So from the 1st of July 2026, real estate agents, buyers agents, property developers will all be required to comply with AML/CTF obligations. This is the most significant change in real estate regulation in Australia in a very, very long time. Australia has actually been behind most other developed worlds on this one. Countries like UK, Canada, and most of Europe have had these obligations for years already. We're catching up. And the deadline is pretty firm. So what does this actually mean for you as an agent? So let's break it down a little bit. The first requirement is that your agency must enroll and register with AUSTRAC. AUSTRAC is Australia's financial intelligence unit. They're the regulator overseeing all of this. Enrolment opens on the 31st of March 2026. Every agency that facilitates the sale or purchase of a property must register. So selling agencies and buying agency is who will need to be registered. This isn't optional. If you're facilitating property transactions from the 1st of July 2026 and your agency isn't registered, you are in breach of the Act. But once registered, the agency must develop and maintain a documented AML/CTF program. So this is your agency's internal policies on how you identify, assess, and manage money laundering and terrorism financing risks. It needs to be approved by a senior management, kept up to date, and independently evaluated at least every 3 years. It's not a one-time tick and flick kind of thing. It's a living document, and everyone who works at the agency, not just the principal, not just the compliance officer, every agent, every admin, anyone who's going to be involved in a sale or purchase transaction, they must complete the AML/CTF training. The training requirement applies across the board. The part that will most directly affect you as an agent on the ground is something called CDD, or customer due diligence. Right now, when a buyer or a seller walks through your door, you take their name, maybe their number, and you get on with the job. From July 2026, that's not going to be enough. You're going to be required to formally verify their identity of your seller from the Form 6 and the buyer when you sign a contract. And not just a quick look at a driver's license. We're talking about checking government issue ID against official databases, understanding who the beneficial owner of the funds is, and checking whether the person is what's called a politically exposed person, meaning someone who holds or has held a prominent public position, which carries a higher risk profile, or whether they appear on any sanctions lists as well. And this isn't just a one-off check at the start of the relationship, it's ongoing. If something about a client's circumstances changes mid-transaction, that might trigger additional due diligence. If something feels off, an unusual payment method, large cash components, a buyer who's evasive about where their money is coming from, that's a red flag that needs to be assessed and potentially reported. Part of your job from July 2026 is going to be knowing what those red flags look like and having the confidence to act upon them. Let's talk about reporting obligations, because this is the part that feels the most foreign to most agents. If you identify a transaction or a client that gives you reasonable grounds to suspect money laundering or terrorism financing, you are legally required to report it to AUSTRAC. This is called a suspicious matter report, or SMR. If you suspect money laundering, you have 3 business days to lodge that report. If you suspect terrorism financing, it must be reported immediately. And what does suspicious look like in real estate? So a buyer who insists on paying a large deposit in cash, a purchaser who seems completely uninterested in the property itself, but is very motivated to settle quickly. A transaction where the source of funds is unclear or doesn't match the buyer's stated income or occupation. Multiple changes of purchasing identity mid-transaction for no apparent reason. These are the kinds of patterns you are going to need to recognize. There are also threshold transactions to report. Any physical cash transaction of 10,000 or more must be reported to AUSTRAC anyway. And all of your customers' due diligence records and transaction documents need to be kept for a minimum of 7 years. If AUSTRAC ever comes asking questions about a particular transaction, you need to be able to produce a full paper trail. That documentation requirement is not optional, and it's not something you can reconstruct after the fact. You need to be doing it as it's happening. So let's talk about who within the agency carries the responsibility for all of this. The principal, the person who holds the agency license, carries the ultimate responsibility. Just like the trust accounting, you cannot delegate this away. The agency must appoint a compliance officer, someone who is registered with AUSTRAC and is responsible for overseeing AML CTF program day to day. In larger agencies, that might be a dedicated role. In smaller agency, it's often going to sit with the principal or a senior manager. As agents, not principals, your role is to know the red flags, follow the agency's AML program, conduct the CDD checks on your clients properly, and escalate anything suspicious to your compliance officer immediately. You are the first line of detection in most cases because you are the one in the room with the client. The compliance officer can't do their job if the agents on the ground aren't doing theirs. All right, so before we get into what this all means practically, I want to give you a sense of the scale of what's coming. So AUSTRAC has released a 679-page document, and that is what agencies would need to work through every single client if they were doing this manually. Every single client, 679 pages. Now you can imagine how that plays out in a busy sales office or buyer's agency. That's where products like PEXAclear are coming into the picture now. Not because I'm pushing any particular product, but because the reality is that nobody is going to manually work through 679 pages per client. Tools that embed the compliance checks directly into your transaction workflow are going to become a normal part of how agencies operate. It doesn't replace your obligation to understand the rules, but it helps you action them consistently and accurately. Without grinding the whole business to a halt as well. So let's talk about what the actual obligations are, what they mean for you as an agent, and how the industry is going to adapt and meet them, I suppose. Now, the consequences are serious. Civil penalties and criminal charges for non-compliance. Agents can personally be held liable if they knowingly facilitate a transaction involving criminal proceeds. The reputational damage to an agency found to have been used as a vehicle for money laundering would be catastrophic. Australian law enforcement and AUSTRAC have been very clear that property is a high-risk sector, and they will be watching closely as the new regime comes into effect. This is not something the industry can afford to be unprepared for. And just so you understand how seriously AUSTRAC takes this, in 2020, Westpac was fined $1.3 billion. That is the largest civil penalty in Australia corporate history. AUSTRAC found that Westpac had breached the AML CTF Act over 23 million times, failing to properly report more than 11 billion in international transactions. The CEO lost his job, the chairman lost his job, and that was the bank, an institution where entire compliance department exists. The message from AUSTRAC was clear. The size of your business is no excuse. If you have obligations under this act and you don't meet them, they will come after you, I suppose is what I'm trying to say. That's the regulatory real estate agents are now going to be dealing with from July 2026. And this isn't theoretical for Australian real estate. AUSTRAC has documented a case where a foreign national made an all-cash offer well above the asking price on a luxury Sydney apartment. The funds came from multiple offshore accounts linked to different companies registered in tax havens. The agent didn't ask questions. The buyer seemed wealthy and motivated. AUSTRAC later identified those funds were linked to a global drug trafficking operation. The property was seized under proceeds of crime laws. The agent didn't know, but that's exactly the point. Not knowing is no longer going to be a defense. So from July 2026, it is your legal obligation to ask questions, run the checks, and if something doesn't add up, you need to report it. And I suppose just so you understand the scale of this problem in Australia, AUSTRAC and the AFP have been very public about the numbers. So in 2021 alone, Australian Federal Police seized 187 million in assets connected to organised crime. Of that, 116 million, so more than 60%, was from real estate. Not cash, not luxury cars, property. And that's just what they caught and seized. So AUSTRAC has estimated that over $1 billion from foreign criminal interests alone was laundered through Australian real estate in a single year. It's $1 billion through property transactions, potentially through agents who had no idea it was happening. And that's exactly why the government has decided that real estate agents can no longer sit outside of the AML CTF. The problem is too big and too well documented to ignore any longer. Now, here's the part that I think actually reassures a lot of you, because when agents first hear about all of this, their immediate concern is, what do I do if I suspect something? Do I confront the client? Do I accuse someone of money laundering? And the answer is no, absolutely not. You do not need to confront anyone. You do not need to put yourself at risk. What you do is document it and report it. That's it. So whether you're working through the 679-page manually or using a platform like Pexaclear to report it to AUSTRAC, the process is the same. You record what you reserved, you note the red flags, and you lodge suspicious matter report with AUSTRAC. You then continue to update that record as you might gather more information throughout the transaction. AUSTRAC doesn't expect you to be a detective. They expect you to have, eyes open, keep records, and report what you see. The investigation is their job. Your job is to make sure nothing suspicious goes undocumented, and critically, you are actually protected by the law for making that report in good faith. You cannot be sued by a client for lodging a suspicious matter report. The law has your back as long as you're acting honestly and following the process. I mentioned that program, PEXA Clear. That's just one of many out there. But essentially, from what I understand, and I'm giving you a point of view here from an agent who's just starting to learn what AML is myself and what AUSTRAC is requiring, and learning about platforms like PEXA Clear. And for me, it looks like along with REIQ, they're going to create, so part of your Form 6, REIQ will put some more information in there that discusses the legislation and has, maybe some questions to prompt you that you need to be asking during that session. But then something like PEXA Clear, how it sort of looks like it's operating is that you will enter in your client's details, their address, their name, their email, their proof of identity. PEXA Clear will then send your client who you're doing this for, it will send them questions, and it will ask them about where your money comes from and what kind of work you do and those sorts of things. It then has a platform where, as an agent, all we essentially see is the client's name. It looks like it had 4 columns to it, and essentially if that gets ticked all the way across and a low risk at the end, there's not too much more we have to do, and that would probably be 99% of our transactions. If it comes back as a medium or high risk, the platform will actually tell us what more questions we need to do, or it might ask us some questions that we need to answer to get some more clarity around things. So it's just going to help agents a little bit. And again, there's other platforms out there. I haven't researched every single one of them. You can do it manually. I just like, I'm a bit more IT based. I like having everything on my computer and operating that way. But everyone's different and every agency is different. But it looks like at least REIQ and companies like PEXA Clear are going to try and make things as easy as possible for us throughout the process. AML CTF obligation exists because the community is trusting the real estate industry not to be a gateway for criminal funds. Both of these things are about the same fundamental principle, and that's integrity. The real estate industry sits at the intersection of some of the biggest financial transactions most people will ever make in their lives. That comes with responsibility. The trust account rules, the AML obligation, the licensing requirements, all of it exists to make sure that this industry operates with the kind of integrity that justifies the trust people place in it. The agents who genuinely understand that not just as compliance boxes to tick, but as actual reasons this profession gets to exist. They're the ones who build long, successful careers. Keep asking questions, keep learning, and stay ahead of what's coming. Thank you for your time today. And remember, with 1st of July 2026 fast approaching, the steps you need to take now will protect your business, your clients, and your license. So thanks, everyone. That was all we know about AML. We will need to start registering with AUSTRAC from March 31st. Any questions, you can contact us or ask AUSTRAC directly.